Well, the outbreak of coronavirus has led to a sharp decline in trade, consumption and business activity in Hong Kong. The latest forecast by HSBC shows its GDP is likely to shrink by about 5% this year and gradually pick up next year. Economists believe fears of a second wave of COVID-19 will continue to impact Hong Kong's economy in the short term and expect a U-shaped recovery. The bank also predicts the 11 largest Chinese companies listed on the Nasdaq in the US will relist in Hong Kong over the next 3 years. The secondary listings will boost the city's Hang Seng Index. Well, for more on Hong Kong's role as an international financial hub amid all these uncertainties, we're joined by John Quelch, Dean of the University of Miami's Herbert Business School. Thank you for joining me.
Thank you.
So I want to start by looking at some of these companies listed. We saw that NetEase and JD.com debuted in Hong Kong in June, and Baidu and Trip.com are also considering secondary listings there. What do you make of this so-called homecoming of secondary listings?
There are two elements here. First, if you're a high-tech or a biotech, fintech type company, you really are addressing an international market, and therefore those companies typically want to address an international investor base. Now, some of those companies have been listed previously in the US, as you mentioned, but with new legislation that the Senate passed last month, they have to subject themselves to tighter regulatory oversight. And if they're non-compliant over a 3-year period under the legislation, they'd automatically be delisted from the US exchange. And therefore, the secondary listing in Hong Kong, for these reasons, looks like a very safe and sensible alternative for these companies such as the ones you mentioned.
Now, some say that this is a financial windfall for the city, but how likely is Hong Kong to benefit from this wave of secondary listings, and to what degree?
Well, Hong Kong has been very prominent in terms of IPO listings, the valuation of IPO listings in recent years until this year, and this year has not been a good year for IPO listings in Hong Kong for obvious reasons, the unrest and also the effects of the coronavirus. But these two particular listings that you mentioned, the NetEase listing in particular, these are boosting by about 50% the level of IPO activity year to date. So it's possible that by the end of the year, with Baidu and others potentially coming in, I think Yum China is also considering a listing in Hong Kong. Collectively, these may put Hong Kong back in the driver's seat in terms of IPO listing valuations.
And so do you expect to see more investment from foreign banks to start flowing because of these secondary listings? And what sectors do you think they might be most interested in?
Well, as I said, principally the listings are in the technology-centric area, the kind of listing that needs an international audience and an international investment base. But I expect to see, broadly speaking, now that we're through the passage of the legislation yesterday, a level of stability that will encourage international investors to come back into Hong Kong. I'm not sure that the real estate market will rebound that quickly, but other sectors of the Hong Kong economy, I think, should move quite well in the second half of the year, assuming that there's no resurgence of the coronavirus pandemic.
And we have seen that there's been some worry about the latest global uncertainties and the coronavirus and the sort of impact that might have in terms of casting doubt on this being Asia's financial capital. Do you share that concern?
As a matter of fact, I don't. I think that although there is talk of companies switching to Singapore as their Asia headquarters, the fact of the matter is that the China market is the driver of the Asian economy, and most multinational companies would want to be located with their regional headquarters and their most prominent regional center in Hong Kong or in China, not hundreds of miles to the west in Singapore. So I feel pretty confident here that Hong Kong is going to continue its dominant role. Beijing needs Hong Kong to be in that role, and the world needs Hong Kong to be in that role as well.
And just quickly, what do you see as the key factors potentially affecting Hong Kong's financial stability in the short to longer term?
Well, I would say that, as I've indicated, Hong Kong is really a very important payments bridge between East and West, between China and the rest of the world. The location of Hong Kong in proximity to the massive China market. And let's not forget what was said at the outset of your report, a highly talented and educated population. And anyone who's done business in Hong Kong knows that it's a highly efficient, process-driven economy where you can get business done fairly, honestly, and quickly.
All right, John Quelch there, Dean of the University of Miami's Herbert Business School. Thank you so much.